As usual, we started this morning at 6:45 by looking at the economic calendar to see if there are any reports of high importance due out today, Monday, the 7th of March. The other report that was going to affect the market we're looking at, which is the Euro-US dollar, was the Eurozone Centix investor confidence at 9:30 in the morning, but that was a report of medium importance. But there are no reports of high importance today. So we just went straight to the market to look at what the market had in store for us. And we'll start with 6 in the morning. So when we met in the morning at 6:30, this is what we saw, or 6:45, sorry. This is what we saw at 6:45. At the time, the market was trending sideways. Let me try and get this. There we go. That's better. Okay, brilliant. So this is what we saw when we met at 6:45 this morning. Market was trending sideways. We established that that was the high point of the sideways trend, and that was the low point of the sideways trend. And as usual, the cardinal rule is to avoid trading within a sideways trend. So this morning, we kept out of the sideways trend, although we used the pivot points to trade, to day trade. But because the pivot point and the first support was within that sideways trend, we decided to keep out of the sideways trend. So we placed a pending buy order just above the first resistance because the first resistance was outside the sideways trend. So that was a safe place to place our pending order to buy just above the first resistance at 14,017. So that was the plan this morning, but we didn't place a pending sell order because we want to avoid trading within the sideways trend. And the only point we could sell outside the sideways trend was S2, but you can't use S2 to trade. So that was the only valid position we could take when we met at 6:45. The market went up, down, went all around the place, as it will do with the sideways trend, and at 9:20, the market took the buy order. I'm just making it a bit bigger now that we're getting close. So at 9:20, the market took our buy order, and it's no longer trending sideways. So once it breaks the sideways trend, all bets are off, so to speak. So it broke the first resistance and took our buy order at 14,106, which kicked in a 20-point stop loss. Okay, so that kicked in a 20-point stop loss, and our first target is for the market to move halfway towards our target. Our profit limit is 60 points, but we looked for the market to go at least halfway towards the target, then we move our stop loss. So 30 points away will be 14,047. So that was our first target. So the market went up, came down, formed a low there, and then started to go back up again. And we met again at 12. So at 12 o'clock when we met, this is what we saw. The market had gone up, it's come back down, it's gone up again, it's formed a new high, and it was sort of going sideways. So at that point we said, if the market was going to keep going up, we wouldn't expect it to come back down and break that low. So at that point we decided to move our stop loss to 14,012 just below that low, so we'll reduce our risk from 20 points to 5 points. And then we're going to wait to see if the market gets to the 30-point level, move it to the opening level, and then wait for it to get to the 60-point mark. So that was the plan at 12 midday when we met. But we also said that obviously the market can only go 3 ways. It could either go up and we achieve our profit target, it could go sideways, or it could come crashing back down. So the plan was that if the market started coming back down and, most importantly, the moving average was now above the first resistance, we could then sell just below the first resistance at 14,013. So we can see here the moving average had gone past the first resistance at about 1245. So at 1245, it was okay to then place a sell order to sell just below the first resistance at 14,013. So that was what happened. So the market kept going sideways, and at 140, the market then would have taken us out of our first trade with a loss of 5 points, and then taken us into the second trade to sell at 14,013. So we delete all the other lines. So once the market took our sell order at 140 at 14,103, again, now that kicked in a 20-point stop loss. That's 14,0133. And again, our first target is halfway towards our profit target of 60 points. So the first target would be 30 points away. That would be 14,083, 13,983. And the 60-point limit would be 13,953. Okay, so market went down, went back up, and then you can see at that point there at 4:30, the market hits the halfway point. So at that point, we then move stop to the opening level, and it's been hovering since then, and you can see it's gotten close to the target, but it hasn't reached there. We'll wait and see if it gets there between now and tomorrow. So that's where we're at now. So we lost 5 points on the first trade. We're still on the second trade to see if we'll get to the 60-point mark or not. And obviously there are no more trades today. So that was what happened today. So today we've lost 5 points on the first trade. The second trade is safe. I see we're not risking any money. We'll see if it gets to the 60-point target between now and tomorrow morning. So for all intents and purposes, we'll just say we've lost 5 points today. We'll wait for the outcome of this trade. So obviously we need to update our spreadsheets. Like I said, we'll stick to the worst case scenario. We've lost 5 points. Like I said, we're using 50p per point. So 50p times 5, we've lost £2.50. So we're down to 100 minus £2.50, which is £97.75. So 97. So we've had a loss of £2.50. But as usual, again, we'll have to make a comment that it's been a good trading day, not because we made a loss of money, Well, it's been a good trading day because we stuck to the trading plan. That's the key. So again, it's not whether you made money or lost money. The key is whether you stuck to the trading plan. So, but we can update that in the morning depending on the outcome of our final trade from today. Okay, any questions on that?